Hi, you've got Brian and Austin, and today we're going to go over approaching how to approach private equity case studies. We'll go over our backgrounds individually. So I'm Brian. I work at a generalist middle market private equity firm and previously worked at a generalist lower middle market private equity firm and a middle market investment bank before that. I had the pleasure of doing associate recruiting twice and felt that my biggest hurdle in the process was not understanding what was expected out of me when it came to the case study, since I could not find a single example on the internet or elsewhere to reference, for my task. I eventually got my hands on a one-page case study memo through a mentor, which significantly changed the recruiting process for me, as I now had at least a high-level direction of what a memo should look like and contain. So I would like to, we would like to provide a, I would like to provide a publicly available longer form guide and example and walkthrough that's written and reviewed by private equity associates and senior associates with experience working in low middle market, and mega fund roles to guide you in your journey, since not everyone has the fortune to have strong mentorship like I did. And I will now pass it on to Austin.
And thanks for the introduction, Brian. Like Brian said, I'm Austin. I also work at a more generalist middle market private equity fund, doing mostly middle market buyout in North America. Before that, I was a management consultant and did mostly private equity transactional engagements, operational diligence, and commercial due diligence for a wide range of private equity clients across industries. And then I went to a large public institution, kind of semi-target undergrad. So, like Brian, I also struggled with the private equity recruiting process. This stage of the process is generally a little later in the interviews. And to get to this stage, this, in my opinion, is the best way to differentiate and the best way to earn a spot. So being able to crush the case study, whether it's a 2 3 hour 1 page quick and dirty model or it's an entire week's worth of work, I think this is a really key area of the interview. And so happy to be working with Brian today and sharing a little bit about what we've learned, both going through the process ourselves and then after having been in the seat now for a couple of years.
Very good point, Austin. I'll add that to that about how this is one of the best ways to earn your spot. I think it's interesting because uh, private equity recruiting can be tough since it's hard to sort of qualify your experience. And so a lot of times, private equity shops will default towards perhaps uh, candidates from certain banks or schools or other types of backgrounds. But the case study is sort of the one and only one-to-one apples to apples sort of comparison you can get against someone else. And so the more kind of like a standardized test, if you will. And so the more the better you perform, and caveating that a case study is kind of akin to what you would do as an associate, right? Putting together IC memos and a model. The better you can do there, you have more room to sort of show that you might be able to be a better candidate than somebody who has maybe a more traditional or a stronger background on paper. Um, so with that, let's get into it, and we shall start with the executive summary. So, as I mentioned, a case study memo and presentation is generally meant to sort of look like an investment committee deck that you would submit for your internal investment committee at a private equity firm, and your investment committee slash IC members are typically executives, or many of them are. And so a lot of times they'll focus on the executive summary slide, which should succinctly address all of the key points from your presentation. So I think this is one of the most important slides, as it summarizes and synthesizes your entire deck, your narrative, and your opinion and your request. And oftentimes, rather than going through a page flip of the deck, your IC will decide what slides they would like to go through in detail based on what is on the page here. So it kind of acts as a table of contents. I would also say that in private equity, you make decisions and you must, and so you have to, unlike in the South side, and so you have to be able to demonstrate your ability to make an informed recommendation regarding, in this case, whether you find a business worth pursuing, and if so, at what valuation, which is something I think many people struggle with since they don't think they have enough data or experience to make a recommendation, but if you're uncomfortable doing so, it will be hard to sort of progress with your presentation, since you're not taking a stance, and therefore the narrative that you're pitching is hard to follow, and people won't be able to understand whether you demonstrate quote unquote investor judgment. Note that you're not making a final investment decision with your deck, and you're not betting your life savings on your recommendation. So you're just simply showing your audience that with the data and information provided, you're capable of making an informed and well-supported decision based on the information you do have available. And you will, of course, you will refine your thoughts with months of further due diligence, should you decide to follow through with your recommendation. Austin, do you have anything you would like to add?
Yeah, Brian, why don't you share a little bit about how much information you're going to have for this case study? I mean, is it like a one-page teaser on the company? Is it a sim? Is it some
Mm,
financials? Because what we're going to go through today does have some detail. So how much background should people expect to have on the target?
that's a really good point. That definitely dictates how confident, if you will, you can be with the recommendation. So, in my experience, and feel free to add, but I think we probably have a similar experience. You typically get a sim or an IM in Europe with your typical sell side, maybe 40 to 80 page sim, and maybe an addendum pack with maybe some customer information or something like that, but typically not a lot. Sometimes you might even get only 10 slides with maybe key snips or key slides from a sim. And so especially, with this level of data availability, it's definitely not expected that you're, honing on a very specific suggested purchase price or, valuation number or deal structure or anything like that. But it's enough to sort of come to a quasi 80-20 kind of uh decision, which in real life at a private equity role is what you're going off of when you make a first round bid or phase one bid, which in my mind is generally what is the stage that the presumed process is in that you're doing the case study for. As in your case study is your memo is assuming that you're making a first round bid, so you're not months into a process and you're the exclusive buyer and all that. What do you think, Austin?
Yeah, my experience has been pretty similar. Generally, for these like full length case studies here, it's a sim, and then also often like a Word document or a PDF from the private equity firm that you're interviewing at, explaining what exactly they want. We
Mm-hmm.
want a three statement model with some scenarios and some sensitivity tables, and we want you to make an IC
Mm-hmm.
deck, or maybe they want to do an IC memo, depending on the style and flavor of the firm. And so often there's also some supplementary material explaining specifically what they want you to do.
Mm-hmm.
Uh, and then the one other thing that I'd add about the executive summary slide, totally agree with you, Brian, that this is the most important slide. And especially if your debrief person is a partner and not like a senior
Mm-hmm.
associate or a VP, this is the most important slide. And for me, I always write this slide last because these ideas are bouncing around in my head or in my notebook or on my OneNote in
Mm-hmm.
only at the very end, once I've gone through all the information, all the other pages, do I try to summarize. I mean, because a good executive summary, you should be able to read this page and understand everything that is to come. And so only once you've made all that information in subsequent pages can you really do a good job summarizing it. So I would typically put a little sticker on this page to remind yourself to come back with it, come back to it, and then at the end, fill this page out.
Definitely agreed. Um, Maybe probably also worth noting that sometimes firms will give you a case study on a business that they are invested in, which I think gives candidates a lot of pressure to sort of go along with that recommendation, or in other words, suggest that you do pursue the business and it is within the strategy and you should submit a bid. Would just caveat that probably if all else equal, you probably should suggest they pursue it, but keep in mind that there's a lot of information that you don't know. Maybe it was a distressed deal and there just was good process dynamics, but they otherwise wouldn't have done it, or perhaps um, it's within their strategy and mandate, but ended up being a very bad deal. So there's a lot of noise that you're not so privy to, and so to definitely be a bit careful. I personally have in some instances where I didn't think the deal made a ton of sense for the firm, I maybe suggested that we should not do the deal. And then even though I know that the firm did end up buying the business and perhaps a bit of a risky move, but in that instance, it did turn out that it wasn't exactly the best deal for the firm in general in terms of the mandate, but there was some unique process dynamics such that that's not outlined in the sim. And so they did end up doing a deal and it worked out well, but my recommendation still made sense, without that information. Any thoughts on that, Austin?
No, totally agree.
Oh, perfect. Cool. So now we're gonna get into sort of the supporting slides or the meat of the deck. The first one, of course, being your business overview, which may look very familiar based on those who have written sims or or other kind of business overview profiles. So a bit self-explanatory, but you're here on this slide just sort of hitting your investment committee with the key facts and details they sort of need to know about the business. So obviously the business and the key question your IC kind of always wants to understand is how do these guys make money? And so you can go over that with the key statistics and metrics section on the bottom right, if you will, with maybe a revenue breakdown or some revenue metrics or geographic considerations or customer overviews. People will, of course, will want to know what market the business plays in and what the historical and projected growth looks like. We don't have historicals here, but that's if available, you could probably put that in so to help the IC understand whether it's a growing or a shrinking market, or where the deal team thinks the market will grow to. And of course, you'll put the financial summary, which at a high level provides an overview of what the business looks like financially. So revenue and EBITDA, of course, being some key metrics, and you could also probably add in a table if you would like with more details such as growth metrics or a walk from EBITDA down to free cash flow.
Mm-hmm. Yeah, the one thing I would add here, and I know you've already used the term already once, Brian, 80/20.
Mm-hmm.
This slide is very high level. If the revenue composition is 70% segment A, 29% segment B, 1% segment C, or there's a whole bunch of other dogs and cats in other, this is the place to aggregate, consolidate, and tell a really easy, clean story. So don't get bogged down in all their other tangential side
Mm-hmm.
businesses and their one little thing over here, one little thing over there. This should be really focused on what's going to move the needle on the business.
Definitely. And maybe to add to that, maybe in investment banking, there's a sort of a pressure to make sure everything you put on the slide is technically and defensively accurate. But in an IC deck probably would avoid, for example, putting in a ton of footnotes caveating, where certain extrapolations have been made or where certain information is left out, since especially in this setting where this is sort of the first IC meeting, since typically there will be a few investment committee meetings, before a final decision is made, whether, regarding whether to purchase a company. So, as you get progressively more and more detailed down the line with your investment committee, you can maybe add a bit more caveats, but at a initial kind of screening stage like this one, you probably don't have to go so deep because it might distract your investment committee. Next slide is on the thesis and considerations and mitigants. So we've provided some examples. Well, your investment committee would, of course, want to understand why you think this business is interesting, and so this is your time to share your narrative of why you think this would be a good investment, and that typically will go in the investment thesis section. So this is your sort of a like in an essay, this is your thesis for why the deal team thinks that this would be a suitable investment for the fund. We provided a couple of examples of example theses that are often used in actual investment committee decks. But essentially, you're talking about the strength of the business. The key considerations, as there is with all potential investments, there are potential risks and downsides to consider. Not everything is a perfect investment, and so this is a chance to sort of illustrate that while you have made a recommendation, there are to support, maybe you have a recommendation to pursue the acquisition of a business, but you will of course in your second round or in a later round need to diligence certain risks or considerations or downside cases. And so we've listed a couple of here that are just kind of the potential weaknesses or potential concerns associated with the business. And oftentimes you can also in here put a mitigant. Mitigant can be either something, I mean, a lot of times you can put a mitigant that you can do further due diligence and sort of see if you can box the risk, or perhaps the risk isn't necessarily applicable to this company, but we will find out in a later round. But this is kind of just giving your IC a flavor for why you like the business and what are the potential risks as they weigh the two and kind of think about your valuation.
Yeah, I would add here, consider the firm that you're applying to. If your firm or your target fund that you're applying to buys a majority growth equity or control growth equity deals in software businesses, your theses and risks are going to be very different than if you're doing distressed industrial
Mm-hmm.
turnaround type stuff. So think about the different theses that they're going to have and consider, and take a look through the portfolio page and see what you think ties across it. Like, oh, this software company really likes, you know, verticalized SaaS or whatever for these, and I think it's for these reasons. And then make sure that those are sprinkled in. Or, oh, this is a really operationally intensive firm. They have just as many people on their in-house consulting team as they do on their deal team. You should probably have a bullet point in there somewhere about, hey, here are the couple things that I think that we can do operationally with this business. So keep in mind the type of firm that you're applying to and what their flavor of investing is. The second piece here is I generally think that both sides of the page here should be prioritized, where at the top of your list should be the most important point of your thesis and your most cogent risk, and it should go down from there. So when you think about those, what are your big two or big three risks, or your big two or big 3 points? Put those at the top, and then your smaller things as you go down.
Good point, Austin. How many in your experiences, how many theses and considerations have you put on in your decks?
I'm actually looking at a template that I've used
Mm-hmm.
before, and I've got 4 or 5 in the merits and
Mm-hmm.
4 or 5 in the risks.
Sounds about right with what I've done in the past.
Yeah.
Yeah. Um, yeah, and I think those 4 or 5, what do you think? Should they also cover sort of 80%, or should the 5 cover more?
Yeah, I mean, I think the 5 should cover a lot of it.
Mm-hmm.
And if you have a list of 15 things, it might be prudent to group some of those things up. Like, oh, kind of
Mm-hmm.
deal considerations. Well, that's the ownership structure and the proposed transaction type, and we're going to put some earnouts and contingent payments and stuff like that. Maybe those are 3
Mm-hmm.
different points in your notes, but you can probably all bucket those together under deal dynamics or something like that. There's probably a way to group those to get 3 to 6 punchier points than
Mm-hmm.
having a list.
Agreed. Cool. Next slide is a example of a financial output to show the investment committee with your, proposed valuation. It will be an output from your LPO model, but it's your recommended range typically. You can sort of highlight it and show the investment committee the kind of key assumptions that are going into your valuation range. In this case, your implied EV to EBITDA entry multiple and your financing package and what that means in terms of an equity check. And there's a lot of metrics right here with revenue and EBITDA metrics for the prior and current forecasted year, which help the committee get a sense for the valuation you're applying. A lot of firms, depends on the firm you work for, but for example, certain firms that are more value oriented might not want to bid above a certain multiple, maybe 8 times or something 9 times like that. And so, when you're putting this together, make sure you're understanding the sort of investment strategy of your firm and whether your proposed valuation makes sense within that context. Maybe in a SaaS deal, a very significant multiple, maybe 15 times, might be normal even. It might not even be considered high because of the forecasted growth of the business. But for an industrial business that has not been growing over the past 5 or 6 years, maybe a 10 times multiple, maybe that could be seen as a bit aggressive.
Mm-hmm. Yeah, totally agree. Nothing to add here.
Okay. These next few slides are just examples of a potential outputs. Nothing too much to discuss here. Just you could walk from, we've provided revenue and EBITDA before. So here's the opportunity to, walk the investment committee through how EBITDA, walks down to your free cash flow. And you could potentially even make this a smaller snip and put it earlier in the business overview page if you wished, which many private equity firms do. Same thing with returns. These are just examples. You can structure it as you wish. Many probably choose to put their returns or financial summaries based on how their bank typically presents them in their own decks. But these are just example sensitivities. Of course, your entry and exit multiples are in here. Anything to add, Austin? Presume probably not.
The one thing I would add here is I like that they have cases and case comparison. This again, I think, is another great place to win some points, being thoughtful about what you think the fund should be willing to underwrite. I mean, the management case is less important, right? It's a rosy sell side view. And then I think the downside case is also important, thinking about what can go wrong and the things you sensitize for or change should probably coincide with what you have on your key considerations, key risks a few slides prior. And I think those are the base case and the downside case are both great points to highlight that you thought about the business. You didn't just regurgitate the sim. I thought about it. Here's what I think's important. Here's how that flows through to financials and ultimately returns. So I think that maybe not this page specifically, return summary, but the base case and the downside case are important and important to actually sink your teeth in and really think about.
Definitely agreed. In the appendix, we just have some supporting slides which might or might not be applicable to your specific case study. So common ones are public comps, some more detail around the specific cases that you ran if your investment committee wants to dive a little bit deeper and understand the walk down of free cash flow for all 3 cases rather than just the revenue and EBITDA. So we have the management case, the downside case, and you can of course put additional returns sensitivities. Would not fill the page just to fill the page, but if there's certain drivers that you think are notable, probably will be related to revenue or EBITDA or industry growth or items like that. This could be a good place to put those. You can also put sensitivities for your other cases that we discussed. And And I always think this is a good one. Your key diligence questions, arguably could put it maybe a little bit higher in the main body of the deck, but your recommendation comes with caveats, and those caveats are that you only have a sim and you've only had maybe a couple hours or a weekend to do your analysis. And so a lot of times your presenters, I mean your audience will ask, if you had more time, what would you have done? And or what would you have asked the management team, or what kind of analyses would you have done if you had unlimited information? And this is a good point, a good area to show that to show your ability to do due diligence and make to further inform your valuation. So here you can put, here's maybe the top 5 questions I would ask management, and here's why. And this is a good. I always think this is a good slide to sort of be your hedge against your valuation. Should you should you get some feedback from your audience that maybe the valuation is too high or too low, you can always sort of point to this and say, I haven't asked these key diligence questions, and maybe the answer from that I would have changed my mind. Austin, do you want to go over any of these slides? Did you have any thoughts?
No, nothing to add. I thought you did a really good job with the walkthrough here.
Cool.
I've also pulled up and redacted a case study that I've used in an interview process before. So I'm happy to share that if we've got a little bit of time left here.
Let's do it.
Okay, great. I'll take over and share here. So I'll start with a little context of what this case study was for, what I got, and then I can flip through some of the pages and show you how I approached it. In no way is this saying this is the gold standard. This is how you have to do all of your case studies. But this is just giving you an example of one that I did. Going back to Brian's preamble at the beginning, there's not a lot of great resources out there to understand the relatively opaque recruiting process that gets you into private equity. So I'm sharing this as one example, and hopefully you plus the internet plus the Forma Futures resources plus this plus your older friends who went through the process collectively can give you a picture about how you want to approach it. So this case study specifically was from a multi-strategy private equity firm, a larger private equity firm, and this was for their middle market buyout group. They gave me a sim plus an instruction packet, 2-3 pages, and a weekend's worth of time. And I made a presentation and a model. So I'll quickly flip through the presentation and then give you a quick walkthrough in the model. I think there's another segment or session being prepared on modeling. So I'll leave like all the model detail to them, but I'll just give you a quick view of what I did. Anything else, Brian, here before I start flipping through?
Would just add that I think what Austin is providing is invaluable. I had my first case study and I spent a full day at the Bryant Park Library looking online for any kind of an example, and I could not. And then just getting my hands on one-page memo from like a 60-minute test my friend did really changed my life. Well, my recruiting life. And so I think for Austin to provide such a more in-depth, PowerPoint, longer form presentation is something that I think is extremely generous and not to be understated.
So thanks, Brian. Okay, so start with the table of contents here. You can see a lot of similar content to the Forma Futures template that we just walked through. Again, start with the executive summary, super important. Go to business overview. It's the 4-quadrant setup that was in the template. Merits and risks, again, super important, should be up towards the front of your deck. I get into financials, some snips from the model, assumptions, what goes into my base case, what goes into my downside case, what are the important drivers, and then what are some basic assumptions around your model, um, not drivers, but how did you set it up? How's your deal financed? What are your different interest rates, stuff like that. Some key diligence questions, and then a little more detail on the downside case. I think pretty standard set of content. If I didn't have a full weekend and this was maybe a 24-hour case, I would have probably only gotten to the top 4 or maybe 5. These are probably, if you've got time, the diligence and the downside case. So start with the exec summary. I, again, saved this for last. I wrote it in prose, and I give a little bit of background on the company, why I think it's compelling, what opportunities there are for this sponsor to create value, and then finish with returns. And then I've got the 2 sensitivity tables at the bottom. Coming back to an important point that Brian made at the beginning, tell them your perspective. If you think they should do the deal, tell them they should do the deal. If you don't think they should do the deal, tell them they shouldn't. And so you can see my tagline: PE firm should pursue the acquisition of company at this valuation with this leverage. It shows that I've taken a position. Is it right? Is it wrong? You know, TBD, but you need to take a position. So this is how I set up my exec summary here. Anything you want to add here, Brian?
No, I think that all makes sense. Maybe just that you can. I don't think there's like a right way to structure your exec summary. Maybe some people use bullet points, some people maybe include a table, maybe some people just put the returns numbers. So just this is not a template necessarily, it's just a very good example. So do what you think makes sense for your case.
Mm-hmm. Here's business and market overview. Again, just your standard 4-quadrant. I've got business description up top. I've got the market overview where you can see that I know it's all redacted, but the 54% is this company that we're looking at, so it's clear market leader. A little bit on the process in the bottom left. This actually was a place that I needed to do a lot of learning coming from consulting. The process dynamics was something I didn't really understand when I got into private equity, but it is really important and often commands a good portion of the conversation. And then last is highlighted financials at the bottom. Merits and risks here. So like Brian asked, how many merits and how many risks did I put in for this specific example? And I think it's reflective of some of the other case studies that I've done. I had 5 in merits and 4 in risks. So of the 5 merits, these I tried to, again, tailor to the specific sponsor that I was applying with. So they typically buy a lot of family or founder-owned businesses. They're often the first institutional capital, and they like profitable, growing market leaders. So you can see those themes are reflected in my first 3 bullet points there. And then the 4th, diversified customer base and history of M&A. Other strong points that I think are relevant and helpful, but I prioritize those a little lower. And then the risks, this one I think we should talk about here, the COVID risk. This case study implied that we go back in time to pre-COVID. These materials were from, I think, 2019, prior to the pandemic. And I went back and forth a little bit about whether or not I should include something that I knew was going to happen in the near future, but I wouldn't have known at the specific time that this case was going on. So I opted to include it because I thought I would be remiss not to include it. And so I thought this business would be impacted by COVID, which when I was doing the debrief. In fact, it was. And so I went ahead and included that with a little caveat that I know it assumes that we're doing this deal pre-COVID, but I think COVID will impact it. So Brian, interested to get your take here. If you're in my position, do you also include something that you know will happen in the future during the hold, even though you're supposed to be hypothetically evaluating this case pre-event?
That's a very good point you bring up, and I do agree that I think you would definitely be remiss to ignore such a global macro event that impacts so many businesses, if not all of them. I guess as opposed to in terms of how to literally go about addressing it, I think probably depends on personal preference, but I think you could probably be coy on one end and maybe outline some potential like risks such as increasing commodity costs or transportation costs, labor costs that happen as a result of COVID. Um, on one end, and on the other end, like Austin, just be more bold and just write COVID risk and just address the point head on because it will be brought up in your debrief probably if the financials are pre COVID, and so definitely different ways to approach it, but it will be brought up. So just you decide how you want to sort of navigate that.
Yeah. Brian, I got another question for you on how to navigate the case interview. So let's say you get into the debrief, and they bring up a point you didn't think about. Like, let's say I didn't think about COVID, and they're like,
Mm-hmm.
"Oh, well, why didn't you put COVID risk in there? Or how do you think the business would be affected by COVID?" And they start to push on a specific topic that you think that you're like, "Oh crap, I missed that. I should have thought of that, but I didn't." How do you play it there?
That's a very good question, Austin. I've run into this in real life, both on both sides of the table, and people react in interestingly different ways. I think in my opinion, the right way to, and it's a great question. I think the right way to approach it is to acknowledge that, well, first of all, if someone's pressing the point, and they sit on the interviewer side of the table, there probably is a reason that they're pushing the point. It's probably because they worked on the deal or they know what happened with this company in particular and are just trying to sort of help you get to the right place. As in, if you forgot one thing, they're trying to help you get there. And it's interesting because in real investment committee meetings, sometimes there is a bit of that dynamic where maybe a senior IC member who's done 20 deals in sector A, has an interesting insight that you just might not have considered because maybe this is the first type of deal that you've worked on in this specific niche subsector. And so the right way to do it in my mind is to accept the feedback, acknowledge you might have missed something, and discuss it constructively with your interviewer. And together, they'll probably try to guide you to the specific point in the risk or whatever that you've missed. And you guys together working on that can show your ability to receive constructive criticism and to grow, which is all positive things, right? I mean, you might have done this case study in a matter of 90 minutes or a weekend, which all both are not long periods of time. So it's and especially if you're coming from an investment banking or consulting seat, it's understandable that you might have missed something because you're not a seasoned investment professional. You've never worked in an investment seat before. So I think that's the right way. It gives a sense of your character, your ability to learn, grow, work together. The wrong approach is probably to double down and say that that point that someone brought up does not make sense because simply because you forgot to include it and you're trying to defend you're trying to defend the fact that you missed something and try to act like you didn't. I think that will hurt you a lot, because it shows that you're not really receptive to learning and you might be someone who could be difficult to work with. Is that what you would do, Austin?
I mean, I kind of think you should sit a little in between those two examples that you just gave.
Mm-hmm.
I don't think you should just immediately cave if the VP, who's the interviewer here, asks a
Yeah.
follow-up question. I think there should be a certain level of conviction in your idea, in your thesis, in what you've prepared, but there also needs to be you need to have high enough EQ to realize, is the interviewer asking a follow-up question because they want me to elaborate, or
Mm.
are they throwing me a bone here and they're letting me know, wink, wink, nod, nod, you missed this?
Mm-hmm.
Or are they trying to see if I'm going to buckle under pressure and they're intentionally poking and prodding? So I don't think you should immediately assume that if they ask a question or they start to dig that that's bad. That might just be like a key point of the deal, and they want to see what you think about it because that's the most important thing. And you need to be firm and fair in your assessment and stick to your guns. But there are some times where you're barking up the wrong tree, and they're saying through, you have to read between the lines and realize that you're on the wrong path. So I think
Mm-hmm.
it's I think you really got to read the room and play it the best you can. But definitely think that if you try to die on the hill and it's the wrong hill, you lose serious points.
That's a very good point, Austin. Yeah, I was coming at it more from you just completely missed something, and then what you do there. But you're right. Definitely don't every question just turn into a pile of pudding. It's I mean it to demonstrate your conviction, you can just answer the question too. I mean, the question might not be a debate, or them pointing out something wrong with what you did. It could just be, as Elton said, just asking you to elaborate. And so, yeah, definitely don't fold if they're just asking to elaborate. But I think some people will try to stress test you for sure. Some shops will definitely just, no matter what, just make it seem like they're attacking, one of your merits or one of your risks, just to see how you deal with pressure. But the point, I guess, would be if you are confident in what you wrote and you have well informed and supported, like, analyses or data points or thoughts, then you should feel confident in what you're doing, and don't be afraid to voice it if so. Um, so yeah, I agree, definitely somewhere in the middle. But if you just miss something, and when they say the thing you missed and you realize that you like it makes so much sense, then probably acknowledge the point and try to come to the right conclusion.
Yeah, yeah, totally agree. Okay, cool. Moving on. I know we're running a little short on time here, so we'll
Mhm.
tab through. Here's just a basic income statement, projected financials with net revenue, GP, adjusted EBITDA, and then I've got a little bit of one free cash flow item, capex, and then one balance sheet item. So I think that's pretty straightforward.
Mhm.
Sources and uses here again, snip straight from the model. Um, this one's this one's a little tough, and this was especially challenging for me coming from consulting, where thinking about businesses and business models, thinking about industries, that was something that I had some reps doing, but knowing how a transaction is set up is less available. Is a business like this, the target in this example, is that something that can support 3 times of debt or 5 times the debt? And a lot of times, I think the materials that are more readily available for private equity recruiting are for mega funds, and often they're dated. And so the availability of debt is different at that level. The structure of debt, the pricing of debt is all different at
Mhm.
that level. So if you're able to talk to somebody, or if you work in this group and you cover middle market industrials, and you know what the market will hold, or you cover technology, or whatever the industry is that this company is in, that's super helpful, because that shows that you're bringing some real world knowledge as
Mhm.
opposed to being able to mechanically do an LBO, which is not as hard as being able to mechanically do an LBO and setting it up with a reasonable set of assumptions. Um, so that's something that's really challenging, and it's hard to get a feel for what the debt markets will look like for specific companies if you don't work in that industry or you don't have people to plug you in there.
A follow-up to that one, Austin, then, in the theme of, potentially getting a case study on a business that was going to sale maybe 5 years ago or so in this case. What interest rate or debt financing environment would you suggest assuming, since things have changed quite a bit in the last 5 years?
Yeah, how I set this one up, if I recall correctly, is the amount of debt I based off of what I knew, which was much more today's environment. But the
Mm-hmm.
actual interest rate, I went back and looked up and I said, okay, base rates for
Mm,
this. And then for pricing, I used today's pricing. So,
yeah.
it was a mix of past and future, but, I don't really know what debt availability looked like in 2019, right?
Yeah.
I think still in college at the time, I didn't know what spreads were. So I kind of mixed the information I have plus uh, regularly or easily available public information on the base rate, and then combine those
Mm-hmm.
to get this.
Yeah. That sounds sensible.
Next page here is company precedents. Again, think about this through the lens of the sponsor that you're applying for. So here you can see my range here. Average was 7.8 of the precedents, median was 8.1, but I'm applying to a more value oriented fund. So I picked a bid that was slightly below the range. Um, if you're applying to a fund that they don't bid on a lot of stuff, but when they do, they're gonna bid their full value, and they're gonna get ahead of the process. And if they want it, they are gonna own it. That's probably a different bid approach than I showed here. But I was kind of familiar with this sponsor. I had some friends from the consulting firm that I went to go and work at this sponsor. So I had a better idea of how they work. And so I realized it's probably better I bid a little bit below,
Mm-hmm.
and then it's going to come out through the process, and we're going to work price up or down based on leverage. And it's not going to be something where I go out full price up front and then we just run ahead as hard as we can on work. That's not how they play.
Do you think it's for maybe a value oriented shop, would you suggest playing it safe and suggesting a lower bid? Just since maybe the investment committee might say, why are we paying more than this comp set?
I
Like, is there
definitely
more
think,
down? You go ahead, yeah.
yeah, I definitely think if you're applying it at a more value oriented shop, which is reflective of the one that I work at, and although I don't work at the one that you work at, I think it's probably also reflective of where you work. Um, Price is definitely a common topic at IC, and I think that it reflects well if you understand that and you try to approach this bid or this case study as they would a real deal. And
Mm-hmm.
so I think it's beneficial if you've got that inside baseball and you know how they work to some degree. I think it's worthwhile to try to reflect their style.
Mm-hmm. And what do you think about? I know the source is merger market, but what do you think about if you have like a precedent transactions comp set from maybe the group you work at, or you're just privy to it, based on your own deal experiences? Do you think that's okay to put here, or is that something maybe a verbal overlay would be better suited for?
I mean, obviously, if it's private information from your current employer, I would discourage you from using that in a context outside of your current employment.
Mm-hmm.
Uh, However, it might be reflective. or it might be worth having a voiceover, like, hey, here are the publicly available comps. Also, from my personal experience, there are some
Yeah,
other assets in the market, and they if they follow the space, they probably know which deals you're talking about based on which bank you work at. There are some other deals in the market that traded above this range or below this range, and because of that, I
yeah,
chose this valuation or that valuation. So
yeah,
I think if you've got a little bit of that information, it's okay to use it, but obviously you should not
yeah,
be sharing private information from your current employer
yeah,
outside of context.
yeah. Or maybe redact the name of the buyers and
Mm.
mm,
All right, couple more slides here. I'll flip through these quickly here. Valuation considerations. Here are a couple other things that I added that aren't quantitative, they're a little more qualitative. Strength of the process, the angle that this firm has, the bid strategy, how do they feel about recuts? What's their relationship with the sell side banker? And then future M&A. How much M&A do you think we're going to do during the hold? And how do you think that's going to blend down our multiple and how we think about multiple? Next one is base case assumptions. Again, I think this is a place where you can win some points. And so I talked about revenue. Here are the things that I think will happen based on the materials I read. Mix shift towards this segment is going to affect gross margin like this. Overall growth by segment is X, Y, and Z, and that's going to get you to blended growth of A. Costs, the same thing. I thought about it by subsegment. And then transaction here. This is more how the deal is going to be set up, the debt financing, the rollover, management options, stuff like that. Priority diligence questions. The top one, a lot of the growth here is predicated on the company moving into this nascent subsegment. So I talked a little bit about what I'd want to ask the management team or the sell side bankers about that. Legal, this business is in an industry that some firms may not be willing to invest in, some lenders might not be willing to lend to, and some LP agreements might preclude investments from. So there are some things that I want to talk to the lawyers about. And then again, this is a more operationally focused, value oriented private equity firm. So I've got some operational points that I want to talk to our ops team about, or if we're hiring that out to a consulting firm, what the consultants think about XYZ. Last two slides. Diligence timing, just a little Gantt chart of what I think we should do over the next couple of weeks. And then downside case. Again, I talk about here are the different things that I change or sensitize. They're tied back to the key risks that I identified earlier. How does that play out in IRR and MOIC? And then ultimately, does the company stay solvent? Are we, the sponsor, able to keep the keys? All that kind of stuff. So a lot to get through there. Like I said, this is just Austin's take. Take it with a grain of salt. Use what you think is helpful, leave what you think is not. And my best advice is tailor it to the specific company and fund that you're interviewing with. Brian, anything else that you want to add here?
No, I think all very well covered. I think there's just in terms of like how to approach it more generally, like everyone's working or presumably working a pretty grueling, banking or consulting or another job, and a lot of times these case studies are um sometimes they're on a weekday, sometimes if you're lucky they're on a weekend, and I would just try to pay attention to when you're scheduling the the test, because that can have an impact on your performance, right? Like one day to do it on a Wednesday is different from one day to do it on a Saturday. So at least for me, if I could control it, I'll just do it on the Saturday so I can spend more time on it. Because at the
Mhm.
end of the day, no one's going to care that I did it on a Wednesday, but someone else did it on a Saturday. It just, your output is your output. Um, and then another interesting aspect is how much time to spend on it. Of course, the more time you're given, the more is expected out of the output. Like a 90, not 90-minute, a case study is probably going to be a 1-page document in Word in a model. But if you were given a week to do it, which I've been given, then you probably will have to do slides like what Austin did, and maybe a more well-formatted model support. But the interesting point there is that some people might put 25 hours into a 1-week case study test, and some people might put 5 hours into this test, and no one will account for that. No one's going to view quality over hours put in because they don't know how many hours you put in. And so there's a bit of like a game theory there with how much time you should invest, because some other guy might be putting in more time than you're willing to, or maybe you're busy on something and someone else is able to, another candidate can put more time. But it's just worth thinking about that at the end of the day, nobody makes adjustments for these things. And so perhaps one way you can sort of mitigate this risk, for example, is if you're quite busy at work, maybe you don't do 2 case studies in the same week if there's overlapping timelines, because you'll have to split up your efforts. So maybe try to I don't know, just do one or try to stagger them. But it's something outside of your control generally, right? How busy you are at work and how much time you have to dedicate. But it's worth thinking about.
Yep. I wish everyone the best. Brian and I have enjoyed giving this session a couple times at this point and hoped it has been helpful. And I think this recorded version opens it up to a much wider audience, both people in the US or in Western Europe, where our live presentations were generally on the right time zone for them. And hopefully, this is helpful for those people as well as those around the world who our previous sessions might have been at an inconvenient time. I would leave you with the private equity recruiting is a very grueling process, and I struggled with it. I think Brian can talk to his own experience as well about struggling through the process. It is really challenging, but having been in the industry now for 2.5, 3 years ish, I've really enjoyed the work. I enjoy the people I work with, and I think it's a really exciting job where you get a lot of the things out of it that I thought and hoped I would get out of it when I was going through the recruiting process. So I would say it's challenging, but finding a good seat at a good firm does make for a really rewarding job.
Agree entirely.
Awesome. Anything else you want to add, Brian, or are we
No,
happy to wrap up here?
sounds like we're good to wrap up.
Awesome. Well, thanks again from Brian and I, and good luck with the recruiting process.
All right. Bye bye.